We are not playing because ebi power.
Why? Because money. Everything is cost. Everything is cost. But still live up now on a protest. Not to be killing somebody. Why?
A country is not merely defined by its borders or its natural resources. It is a collective entity shaped by its people, their well-being, and the strength of its economic foundation. The comfort of the citizens is a key indicator of a nation's prosperity, deeply tied to their purchasing power, the ability of individuals to buy goods and services with their income. When the economy thrives, purchasing power grows, allowing people to access the essentials of life such as food, healthcare and education, fostering stability and development. Equally, when economic instability rises, purchasing power shrinks, leading to hardship and discontent. In recent years, Nigeria has faced significant economic challenges that have deeply affected the well-being of its citizens. Inflation, currency devaluation, and scarcity of foreign exchange have created a hostile environment for both businesses and households. Inflation has soared to over 26% in 2023, largely driven by policies like the removal of fuel subsidies and the decision to float the Naira. This has resulted in a sharp rise in the cost of living, affecting basic commodities and eroding the purchasing power of millions of Nigerians. The removal of the fuel subsidy alone has caused fuel prices to triple, which in turn has led to widespread price hikes across various sectors, compounding the hardships faced by households and businesses. The Naira has dramatically devalued, losing over 55% of its value against the US dollar, making it one of the worst performing currencies globally. By September 2023, the Naira was trading at over 1,000 Naira to $1, up from around 445 Naira at the beginning of the year. The policy decision to float the Naira was aimed at unifying exchange rates, but it has created significant instability in the market, driving up the cost of imports and escalating forex scarcity. The combination of rising inflation and a weakened Naira has severely impacted the cost of living in Nigeria. Prices of basic food items have skyrocketed as Nigeria is heavily reliant on imports for essential commodities like rice, wheat, and cooking gas.
We are not playing because power.
The cost of food has surged by more than 30% in some cases, making it increasingly difficult for households to meet basic needs. Many businesses have also been hit hard, particularly those reliant on imported raw materials, leading to higher production costs and reduced profit margins. The removal of fuel subsidies further increased transportation costs, which directly impact food distribution and pricing. Many Nigerians now struggle with significantly higher living costs, with inflation affecting not just food, but also healthcare, education, and housing. Following research and sampling of opinions, a large number of respondents noted that the removal of the fuel subsidy has caused widespread economic hardship. Households are now paying much higher prices for fuel, which has a ripple effect on other sectors. Transport costs have soared, which in turn has pushed up the prices of goods across the board. Companies reliant on fuel, particularly those in manufacturing, logistics, and transportations, have reported substantial losses. Some industries are reducing operations or laying off workers due to unsustained costs. According to estimates, businesses and households have collectively lost billions in purchasing power since the removal of the subsidy. The informal sector, which represents a large portion of Nigeria's economy, has been especially hard hit, with many small businesses struggling to survive in an environment of escalating cost and dwindling consumer demand. The removal of the subsidy coupled with the devaluation of the Naira has caused a significant contraction in the economic activity. According to analysts, Nigeria's GDP growth has slowed down as the cost of doing business have risen sharply and consumer spending has dropped. Many companies have been forced to scale back operations, and the risk of stagflation, a combination of stagnating growth and rising inflation, looms large as foreign investors become increasingly cautious due to currency risks and unstable policies. Foreign direct investment (FDI) in Nigeria have also seen a decline. Public reactions to these economic challenges have been overwhelmingly negative as they seize every opportunity to express their frustration with the government's handling of the economic situation, particularly the rapid implementation of the subsidy removal without adequate social safety nets. Many feel that the government's policies have disproportionately affected the poor, with little relief in sight. Protests and strikes have been organized by labor unions and other concerned Nigerians, calling for government intervention to ease the burden on citizens.
This Nigeria, hungry the wire people.
President Tinubu, look help us Nigeria, help us our brother.
Mr. President is not fair. Attend to us.
You cannot go to school. Why? Because money. Everything is cost. Everything is cost. But still live work now on a protest. Must be killing somebody. Why?
The whole thing that is causing hardship in Nigeria should be reduced, most especially the fuel price. The common man in society cannot feed themselves 3 square meals.
The root cause of these challenges include Nigeria's over-reliance on oil exports, which makes the economy vulnerable to fluctuations in global oil prices. Policy shifts like the fuel subsidy removal were aimed at long-term economic reform, but the immediate effects have been painful. Forest scarcity is driven by declining oil revenues and the inability to attract significant foreign investment. This is the current reality, and Nigerians are looking forward to better days when the nation will fully recover and citizens will smile freely again. Grace Komalafe, Souq News Television.